Hey guys, how you going? I hope you're well. Today I thought I'd bring you guys something different. Tell me if you like this format. So I thought I'd give you a video. We'll start off with just a quick update about our portfolio and then we'll go into a video lesson. So overall, the portfolio is looking really strong. Um, you know, Year to date, we're up 37%. We did have that big correction in May, down 13% because of that correction that we faced in the cryptocurrency market. But overall, right now, the market looks very strong. Bitcoin looks like it's all right. Ethereum looking pretty good, and it's quite a small percentage of our total portfolio now. And the rest of our portfolio is just all in those tech companies. So they're all breaking out. They're all looking really strong. So hopefully the target leading into the end of the year, we're right now on 37%. Hopefully we can get that up to 50%. So pretty much every month, the target is roughly like making 2 to 3%, because if we can make 2 to 3%, then we can end the year on 36%. And if we can do that for our entire lifetime, we will die very, very wealthy. So that's the goal. If we can get another 2 or 3% each month, another maybe 15% by the end of the year, then that will total 50%, and I'll be very happy with that. But even 30% right now, it's been a pretty damn good year. So overall, portfolio is looking really good. They're talking about across the globe right now, coronavirus, the Delta virus, and what does this mean? In terms of our portfolio, I think it's sadly, it's a reality that it's actually bullish. It's actually good news for us in a way. And this is an example of understanding safer finances, right? So when you diversify your income and the way you make money, you can actually protect yourselves across different risks that many people can't see. So if this Delta virus really spreads across the world and it results in more lockdowns and all of that, what is going to happen to the world? The world is going to use a whole lot more technology. And yeah, the reality is we're probably going to benefit again, just like we did last year. So last year we made 75%. It's kind of because of the coronavirus. So luckily for us, our whole entire portfolio is all in technology. So nothing to worry about the coronavirus for us. I think if it does become a big thing, you might see a big correction in 1 month, just like we did last year in March. So we had a decent correction. I'll go into the S&P 500 now. And so we had that big correction, that initial reaction. If the market does start to worry, we might have a correction like this. I doubt it's going to be as big because now we know what we're facing. But then I expect we would go higher, and especially with our companies, I think we'll face a smaller dip, and we'll go up even faster than the rest of the market. So overall, we're safe, we're looking good. But now let's jump into the actual video lesson. So what I want to talk about today is the difference between financial knowledge, right? Financial knowledge and financial wisdom, right? Financial wisdom. Let's make this a little bit larger so you can see. All right, so financial knowledge and financial wisdom. So I truly believe, a lot of people, they're in this camp, and it's really hard to get over to this camp where it just becomes you. So I think the difference is you understand the facts in financial knowledge, but financial wisdom, it is you and it is a part of you and you embody it. So what we're going to be talking about is compound interest, right? So compound interest is a concept that pretty much everybody is familiar with, right? It's just the compounding returns of, if you're making, say, 10% in 1 year, right? So if you're always constantly making 10% each year, over time, you will make more and more money, because the more money you have, the larger the returns will be. So over the long term, it kind of turns into a big snowball effect, and it results in massive, massive gains. So this is pretty much how everybody makes their wealth in the stock market. It's all due to compound interest, right? But what I want to do is I want to test to see, are you in financial knowledge or are you in financial wisdom? And do you truly understand the impacts of compound interest? So let me ask you this question. If we were to invest $10,000, right, at a rate of return, of 20%, which is our target with the eToro portfolio. So a lot of our companies, they're compounding at the rate of like 30%. So our mindset, like the big macro picture is, hey, we've got about 55 assets. They've all had a history over the last decade of compounding around 30%. They're not all going to continue like that into the future. But seeing that we got 55%, even if 70% of them work and 30% end up failing, we end up cutting our losses on them, then we're pretty damn sure we're going to result in a compounded rate of 20% or potentially over. So that's the target. That's the theory behind it all. So $10,000 at a rate of return of 20% for 50 years, right? And that's the question right there. That's what we're focusing on. How much money would you be left over with if you did that? So just $10,000, a once-off lump sum, never investing again, literally never putting in any more money ever again, at 20% for 50 years. So let's try and think of this like, I always talk about, like with my little sisters, hey, you know, you're becoming an adult, you're becoming 18, you're about to turn 18. So if you can save $10,000 by the age of 20, right, by the age of 20, then by age 70, you're going to be left with heaps and heaps and heaps of money, all right? You're going to be extremely wealthy. So what is the number? Just think, don't check it yet, but just think like, how much do you think that $10,000 will turn into? You know, and then think like, if you invested that, say, into a different way, if you put that $10,000 in cash in a savings account, all right? So if you put $10,000 in a savings account for 50 years, how much money do you think you would make from that decision? Now also think about if you did that in real estate, right? And you might know examples of people, maybe grandparents that have been a real estate investor for 50 years, right? How much do you think $10,000 would grow into real estate? And it's kind of a trick question because you can't invest only $10,000 in real estate, but just imagine you could. What would be the return? You know, how much would it multiply by, right? Do you think you can make 5 times your money, 10 times your money, 100 times your money? How much? What do you think the multiple would be? All right, so just think about that. And now pause the video if you have to do a little bit more thinking, but we're going to start working it out right now. So we're going to jump over to the compound interest calculator. You can go onto the moneysmart.gov.au website and it has it all here for you. So I'm just going to quickly put in $10,000 initial deposit. Regular deposit, meaning like your dollar cost average, how much are you investing every month of your paycheck? We're actually going to go with 0 with this one, right? Deposit frequency, that doesn't matter because we're investing nothing. Compound frequency should always be on annually because we're always talking about annual returns. We're never talking about monthly returns, right? I don't really understand why they have monthly there in the first place, and it definitely should be the default, right? Now we're going to change the interest rate, which is your profit, 20%, change that to 20, and we're going to change this to 50 years. So how much would $10,000 turn into in 50 years? And keep in mind, you know, the average age for retirement in Australia is moving higher and higher and higher every year. So 70 does sound old, but, you know, I'm a big believer in technology. And I think, you know, when we're age 70, you know, it's still pretty young. Still pretty young. Let's have a look at this. So these are the results. You can't even see the amount of money you invested in the beginning, but by year 50, you would have $91 million. $91 million, right? So if you can just get 20% per year, year on year on year on year, your money would compound and you would get $91 million. So like, you might have grandparents right now or parents that are age 70. Do they have $91 million, right? Even if they invested that at the interest rate of 10%, which was, the average return of the S&P 500 over the last 50 years or so, right? And if they reinvested dividends across that time, right? If they just got 10% as well, look at that. That's $1 million. That's only 10 by investing 10,000, right? And you'd hope that people across their life would invest at least 100,000, right? So $100,000 for 50 years will turn into 11 mil at just 10%. But 10% is just the average. The S&P 500, yes, it's the top 500 companies in the whole entire world, or well, it's the US. The strongest companies are from the US. But there's a lot of average companies there. There's a lot of old school traditional companies that are dying over time, and now technology businesses, they're overtaking them, right? So let's go back. $10,000, right, at 20% for 50 years, that is $91 million. So I reckon if you guessed roughly between, say, 50 million, if you thought 50 million to, I don't know, maybe 150 million, or maybe even plus, higher than that, if you thought $10,000 would turn to more than $50 million, I reckon that's a sign that you have wisdom, financial wisdom in terms of compound interest. If it was below that, the reality is you got some work to do. You don't necessarily have to know everything about investing, but you definitely do want to know all the benefits of compound interest, because it's one of those heavy hitters. If you understand compound interest and how powerful it is for the long term, it's really going to help with your conviction and your confidence with investing with us. And if you have a high amount of confidence, right, then you are able to put in larger amounts of money into the portfolio. And if you can put larger amounts of money into the portfolio, then you're probably going to end up with a whole lot in over your lifetime. So that's the example of 50 years. A lot of people, they can't be bothered waiting 50 years, 40 years, it's still 14 million, right? 14 million, 30 years, even 30 years, it's $2 million with never investing ever again, right? $2 million without investing ever again. So let's just say that took 30 years, right, to get 2 mil. So $10,000 would turn into over $2 million, 2 mil in 30 years, right? And now if you're compounding at 20% and you have a net worth of 2 million, that means every single year you would be making $400,000 by doing nothing. $400,000 by doing nothing, you can retire. If your lifestyle that you want to have, if your dream is you want to spend $400,000 every year, if you're happy with that, then you'll be able to retire with $2 million. So, that brings us on to the question of retirement. How do you do that? Most people always think about retirement in terms of how much cash do I need so that I can live off of it, right? So how much cash do I need so I can live off of it? So if I want to spend $50,000 per year, then how much would I need total so that can pay for my retirement? But that's the wrong way to look at it. The right way to look at it is first beginning with the question of, what do I want my lifestyle to look like when I retire? So let's just say it is, I want to be able to spend $100,000 every single year. So I want to spend 100 grand every year, and I would have a pretty damn good lifestyle with that. It can be more, it can be less. If you want it to be less, that means you can retire a lot earlier. If you want it to be more, you've got to sacrifice more, work harder, and wait longer, right? But let's just go with this, $100,000. That's what a lot of people like to say. So at $100,000, you pretty much need $1 million of assets, right? It's not that hard to make $1 million. You know, I reckon if you have this financial wisdom and you work hard and you sacrifice, it should never take more than 10 years to get $1 million, no matter where you are. Even if you're starting from absolutely nothing, it should not take you more than 10 years to make $1 million. All right. So you would need $1 million of assets. And if you're making 20% per year off of those assets, then you would be making $200,000 every year by doing nothing. So you're making $200,000 in your sleep by doing nothing. All you need to do is wait for the next year to make that 20%, and your money will be refreshed. So to retire, all you need to do is get the 1 million, right? 1 million of assets. Then the next year you would make 20% of that. So then you get another 200K, right? So you're plussing 200K. And then your total net worth would then be 1.2 million, right? 1.2 mil, right? Then just make sure in that year, you don't spend more than that 200K. So let's just say you spend it exactly, that 200K. If you spend 200K in that year, what are you left with? You're left with that 1 million again. So then the cycle just continues. And if you spend less than the 200K, your net worth will actually grow, and the amount that you can spend each year would actually go up. So hopefully that's been beneficial. Hopefully you've learned something here. But really, you know, it's good to take a deep look at yourself and ask yourself, hey, am I in the financial knowledge category, or am I in the financial wisdom category? And what do I actually want my lifestyle to look like? Because depending on what you want, you would have to, you know, plan your life out accordingly. And so if you guys have any questions, please comment them below. If you'd like to book in as a free Zoom call, I offer that to all of our investors. You know, I'm doing this for the long term to really try and build my reputation. You know, I want to be known as one of the greatest investors of all time, and I want to help a lot of people along the way. And, you know, it's my goal to eventually help donate $1 billion through my knowledge, through the people around me. And I'm pretty sure we're going to eventually be able to do that one day. So thank you very much, guys. Hopefully you like this video, and have a nice weekend.